Yeah, I mean, we see opportunities in Japan and Japanese equities now that we've had the sell-off. If you hedge it back to dollars, you can get 7% yield in Japanese equities, so not many people want to hedge at the moment, but once the yen actually stabilizes. And, you've seen Japanese banks moving around. They're key beneficiaries of rate rises. There could be opportunities there. So as with your previous person on the show, we believe there are opportunities in Japan. It's a secular story. It's long-term. So we do think that the corporate kind of improvement in terms of return on equity and payouts to shareholders will continue. And we think this has been ongoing since 2012. It's not the last year or so. It started very slowly, but we think it's a long-term story. So had you asked me 2 weeks ago, I would have said, we love Japan strategically, we hate it tactically, and Europe would be a mirror image. So we love it tactically, we hate it strategically. And that would have been great, but now here we are today.
Khan was talking about Japan being on the verge of a M&A boom and almost was drawing parallels to the US in the 1970s. So where would you find those targets that are ripe for acquisition, and what sectors or names has a takeover premium over them?
Yeah, I mean, he said small caps are very much, the preserve of domestic managers, Japanese-speaking managers. But I cover convertibles, for example. So Japanese convertibles, very overlooked asset class. And you can buy in at 100, 105 at the moment on a lot of quite cyclical names, some of which would be susceptible to takeovers. I mean, we take issue slightly there because culturally, takeovers in Japan are probably not where US was in the 80s when you had, the real barbarians at the gate kind of idea. So, we think we're a long way from that. But the actual potential for unlocking value in Japan, whether it's through takeovers, whether it's through improved management, improved shareholder returns, we think it's huge. Yeah. But we think it's a secular story. It's a long-term story. So, I mean, clearly, for the next week or so, it's all about the yen. Longer term valuations are now quite low, the growth prospects are higher, and Japan sits very nicely, if you can say that, geopolitically at the moment as well. You've got the election coming up in the States, and Japan doesn't look like the country that's going to be hit the most if there are tariffs, for example.
It's a friend. Yeah, considered a friend, at least. Interesting. But back to this issue of convertibles, you're talking about paper which is convertible to equity.
Absolutely,
yes.
Yeah,
with small caps, the small cap space, and let's continue with the theme that Shri brought up. We've got wages rising, right? You've got rates rising as well, and this is a group that would be more vulnerable to both factors, you would agree, rather than, let's say, the Toyotas of the world. And given the state that a lot of them are in, which is not great, it potentially could force a lot of consolidation. This is the M&A we're talking about. It's literally creative destruction, yes?
Yeah, a little bit. I mean, I think, you can overplay that in terms of real rates in Japan are still negative. So, you've still got very easy conditions there. Real incomes are growing. The domestic economy should do well. It's the exporters probably that are more vulnerable. But all of that said, the unlocking of the value, the assets on the balance sheet, etc., whether it's through M&As, whether it's through takeovers, would be, very realizable through the convertible world. And, just one other thought on that, when you have rates still quite high and companies looking for growth, it's a very good way of sort of delaying your coupon cost, your ongoing interest cost to the future. So you probably see a lot more issuance, I suppose is what I'm saying.